Ever wish you had like a cheat sheet for building wealth? You know, like a roadmap that those already in the know, those who've already built wealth are
Yeah,
using.
absolutely.
Well, today we are going deep, deep, deep into the 751015 rule.
And this is a good one. I really like this rule because it's simple, it's effective, and it's not just for the super rich.
Right. It's really for anybody at any income level
Exactly.
who is looking to build wealth for themselves. So whether you are prepping for a financial planning meeting, maybe you're just curious about wealth building strategies in general, or maybe you just can't stand feeling overwhelmed by all this financial jargon out there.
Yeah,
This one's for you.
this one's for you.
Get ready to ditch that idea that you need some huge income to start building some real serious wealth.
Yeah, it's a myth.
So let's break it down. What is this magical 751015 rule?
Okay, so the 751015 rule, at its core, it's all about dividing your after-tax income into three main buckets. All right, so we've got 75% dedicated to expenses, 10% going towards savings, and that remaining 15%. That's the exciting part. That's for investments.
All right, so 75% on expenses, that doesn't sound too bad. I can work with that. What does that actually mean, though?
Yeah, so it's not about deprivation, right? It's
Yeah.
not about cutting out all the fun stuff. Instead, it's about being mindful. It's about spending on the things that truly matter to you.
So it's really about value over just pure cost, right?
Exactly. Value over cost. I like that.
So if I want to spend a little bit more, let's say, on travel, because travel is something that really matters to me,
Sure.
but maybe I spend less on eating out because, frankly, I can cook at home for a lot cheaper and probably a lot healthier, too. That's okay.
Absolutely. And this is the beauty of the 751015 rule. It gives you that framework, that flexibility to prioritize what matters most to you. So if travel's your thing, prioritize it. If it's, I don't know, collecting vintage comic books, as long as it fits within that 75%, you're golden.
Guilt-free spending.
Guilt-free, exactly.
Love it. Okay. Let's talk about that 10% for savings. What's that all about?
All right, so this is your safety net. This is your emergency fund for those unexpected curveballs life throws your way.
Right, because those always happen.
Always, always.
The car breaks down, you get a medical bill you weren't expecting.
Exactly. Job loss, whatever it is.
Yeah.
This 10% is there to give you that peace of mind, knowing you can handle those unexpected bumps in the road. The goal is to have about 5 months worth of living expenses tucked away in that emergency fund.
5 months.
5 months.
So that's rent or mortgage,
Everything.
utilities, all of that.
Groceries, everything.
That's a nice cushion.
Yeah, it is. It's a nice little cushion to have, It just takes the pressure off when those unexpected things happen.
Absolutely. All right, so where's the best place to keep those savings?
Okay, so this is where high-yield savings accounts come in. You don't want to just leave it sitting in your checking account where it's not really doing much for you. Right. So high-yield savings accounts, they offer a much better interest rate compared to those traditional savings accounts you might find at, your typical brick-and-mortar banks. Yeah. Some popular options? You've got online banks like Ally Bank,
Okay.
Marcus by Goldman Sachs. They usually offer more competitive interest rate.
So it actually makes a difference.
Oh, it makes a huge difference, especially over time.
Interesting.
Yeah.
Okay. Let's talk about, I think, the more exciting part of this 751015 rule, investing. So that's that 15% that's left over. This is where we move from, I guess, working for our money to making our money work for us, right?
It's
Yeah.
precisely.
Yeah.
This 15% is dedicated to building wealth. This is where you shift your mindset from just earning a paycheck to building a portfolio of assets.
Okay.
Things that are going to generate income, increase in value over time.
So for someone like me who, I like the idea of diversifying my income streams, right? I
Yeah.
don't just want to rely on one single source of income. What are some examples? What are some assets that I could look into?
Oh, so many options.
Mm-hmm.
You could look into real estate, buy a property, rent it out for that passive income. Dividend-paying stocks, those are great too. They give you a little piece of a company's profits.
Right, right.
You could even think about starting an online business, something on the side.
Yeah.
There's a lot of potential there. It all really comes down to, your risk tolerance.
Right.
How much risk are you willing to take?
Mm.
And then your individual goals.
Yeah.
What are you ultimately working toward?
What do you want your life to look like?
Exactly.
Yeah, that makes sense. Now, what about this thing called compound interest? I always hear about that, but it always kind of seemed like magic to me.
It does. It does. But it's really not as complicated as it sounds.
Uh-huh.
Imagine a snowball, right? Rolling down a hill.
Yeah.
As it rolls, it picks up more and more snow, gets bigger and bigger.
Okay.
Compound interest is kind of like that. You're basically earning interest on your interest.
So it's like free money.
Kind of. Like, it's free in the sense that you're not actively working for it.
Right.
Let's say you invest $100 and it earns you 10% interest that year. Now you have $110.
Hmm.
But the next year, you're earning interest on that $110, not just the original $100.
Wow.
Right. And this just keeps compounding year after year. Over time, that snowball effect, as I call it, can lead to significant growth.
That's wild. So it seems like time is really your friend when it comes to investing.
Absolutely. The earlier you start, the more time your money has to grow.
Now, before we wrap up, are there ways to maybe reduce the amount of taxes that you pay on those earnings?
Yes,
Yeah.
absolutely. And this is where tax advantage accounts come in. You've got your Roth IRAs, your 401ks.
I've heard of those.
These accounts allow your investments to grow either tax-free or tax-deferred.
That sounds like a pretty good deal.
Yeah. It can make a big difference in the long run, especially as those earnings start to add up.
Now, for someone who's maybe just starting out, who's listening to this and thinking, okay, this all sounds great, but where do I even begin?
Yeah. It can feel overwhelming, right? For beginners, I always recommend checking out index funds.
Mm-hmm.
They're a really simple and effective way to invest in a diversified basket of stocks. They're like a low-cost, low-maintenance way to dip your toes into the water.
It's like a little starter pack.
Exactly,
Yeah.
exactly. Little starter pack for investing.
I like it. So it seems like with this 751015 rule, it's not just about the numbers themselves. It's about creating that sustainable system for managing money, building wealth over time. And like we were talking about earlier, kind of shifting your mindset from just earning a paycheck to building a more secure financial future for yourself.
That's exactly it. It's about taking control of your finances,
Mhm.
making informed decisions, and designing a life where you're not constantly stressed or anxious about money.
So for our listeners out there, think about this. What truly matters to you? What would you do if money was no object?
Yeah.
Would you travel the world? Would you start that business?
Write that book.
Exactly. Spend more time with your loved ones. Whatever those goals are, whatever that vision looks like for you, this 75-10115 rule can be that framework, that foundation for achieving it.
It's a roadmap.
It's a roadmap.
That's a good way to put it.
Well, on that note, thank you so much for coming on this deep dive with me. This was great.
Thank you for having me.
And for everyone listening, keep learning, keep exploring, and until next time.